Alright guys, in this video we're going to be going over the same thing, euro pound, except this time we're going to be going over what happened here in this zone, this actual PRZ zone of our big crap pattern. Right? Once we got that triple bottom, what's going on inside of this triple bottom? Right? There's actually a lot going on. We have multiple harmonic patterns, and I'm actually going to be going over and just showing you basically an example of how you're going to be able to spot harmonic patterns, especially when the market's swinging back and forth, ranging. That's when you're going to begin to spot them, and then you'll be able to take advantage of them and see trading opportunities. So let's actually start off right here. You see this double top type structure? That already gives me a clue that something's going on. All right, something's going on right here. So let's actually break it down. So I see an up move, a small pullback, and then I see a drive up again. So I'm going to draw an arrow from that low to this high. Okay. Because you see it bounced off the 224, retraced a little bit, and then it took off. Okay. That's how I drew the arrow like that. Okay, now you get a pullback. Hit the double top type structure. And then we get a fall through. Notice we break the middle part of the double top, but we don't go that far. We don't break the low. That gives me the clue that it's a pattern. Okay. So let's measure it out. From this low to this high, it's going to be a 50%. Okay. As soon as I see 50% retracement and I see a double top, right away my mind is going to go that this might be a bat. Okay. And the reason why it might be a bat is because of the 50% retracement. Okay. So I know if it breaks this middle part of this double top, I already have my I basically have my targets. So where I'm going to try to see if price is going to reverse off of. Okay. So we have 50% right there. Now, actually extend this, and let me actually add in the 886 here. So if you don't understand harmonics, just go to the harmonic section. Okay. See that 886? How it came in right there? Boom. That's a bullish bat. Okay, but hold on. Let's get more confidence. Let's put in our ABA extension. A, B, back up at the A. Boom, our 1618 lines up perfectly with the 886. That gives us our PRZ zone right here. Alright, so if you actually want to measure, if you want to use the extension right on the tip of the B point, it'll be a little bit, you have a little bit tighter range here. Alright, so boom. Alright, so that's, check this out, let me draw it in. XA, B, 50%, C, it's like an 886, 786, so it closed below that, but it spiked up, so. But we get, once I know that 50%'s in there, and I start seeing that break downwards, I'm going to start looking for that 886, 1618. And boom. What happens? Boom, we get a nice pullback, right? This is a daily chart, so this is a couple of days of rise, so it's a nice opportunity right here, intraday, right? Not even intraday, you could hold it for 2-3 days, it would have been a nice opportunity, right? When it bounced off the 1618 and the 886, our take profit targets, so let me actually introduce take profit targets a little bit. C to D, right? We can either do A to D or C to D. I'm going to do C to D in this instance. Because, I mean, they're almost pretty much in the same spot. Because look how high that double top is. Let me erase these 50s, these 6. All we need to know is the 618 and the 382 for our take profit targets. Okay, so as you can see, if we took it off right when it touched that zone, if you have these harmonics played out, once you get really good at them and you plot out your zones perfectly, as soon as these zones touch, you can either have a buy limit there or you can actually buy yourself manually. Okay, or if you don't want to buy right when it touches it, which is, some people say it's the riskiest, because it can just keep going, which is true. But when you have these harmonics plotted out, like let's say a bigger harmonic, like a daily one, like let's say, you know, a huge harmonic, when you get those real tight PRZ zones, they act as very, very strong support and resistance. Okay, so that's why you can take the entries literally when price touches them. If price, like let's say, if you don't want to buy right when it touches it, you want to be safer, what you can do is you can actually wait for some type of reversal pattern off of those zones, okay? And then you can get in. So let's say you got in right here after this double bottom type structure, right? On the 4-hour chart, it'd be like a double bottom, right, with a higher low right here. And then it takes off right here. You can get an entry right here on the daily chart. Your take profit would have been 618, right? 382 and the 618. If you got in down here, super perfect entry, then you would probably take profit at the 382 or the 618. Okay, take profit 1, take profit 2. All right. If you got in later, then obviously you're going to be aiming probably for the 618 because the 382 is literally right there. Okay. So now that's a bullish bat. Okay, now the market goes up, breaks the high, makes an ugly structure right here, and then upside down hammer, and then we get a bearish hammer, right? And then boom, we get a drop off, huge drop off. What's going on? What's going on? What's going on? Well, let's measure out Fibonacci. This high to this low. Okay, it looks like we got a 382 retracement. Okay, that's good. Let's see the 618. I think this is going to be a bearish shark. And I'll show you why right now. So let me take off the 618. Okay, so you see how we have a down move, a pullback, 382 pullback, and then we get a break of the low. Let's find out what that break, where that break comes in at. Okay, it's probably gonna be a 113. So once again, going back to our previous video, Fibonacci extension from the high to low, back up to the origin. All right, I don't have the 113 on there. Let me add it in. So I like to keep my charts clean. 113 right here, boom, there it is. Comes in right at the 113, and then we get the turnaround. That's a big clue. Okay, and then once it breaks this B point, right, if this is forming another harmonic, we're going to see where our D point projection is, all right? So this is kind of like an awkward harmonic. So what I'm going to do is pull out my Fibonacci extension, ABA this time. A, up into B, back down into A. And we see price reject right where we wanted to, 1618, right, for a shark, bear shark. Okay, let me erase this 113 on that extension. Cleaner, boom. All right. We're using the 1618 because I don't think it touched the 886 up here, right? That's why we're going to be using that ABA expansion, all right? Because you got to remember, you got to line it up with two Fibonacci numbers. Our harmonic pattern, you got to line up the ABA, AXA. Okay. Very simple. Right. Especially for these type of patterns where you get the extensions and all that. So you got to be real careful. ABA was a 1618, so this is a bear shark. You have a down move. Pull back to the 382. The reason it's a shark because it breaks the low and it hits the 113. All right, so when it hits that 113, right away, alarm's going off. If it bounces off, we're going to start making probably a harmonic pattern. I'm going to get prepared. You can buy it up, right? If you think it's going to make a shark and you start seeing it reject off the 113, you can buy it up until the 1618 or ABA move. All right. So let me actually add it. Since this is a shark, let me add in the 886 in here so I can show you that it was actually not close, but it would have been a PRZ zone, so it would have been like this. Check it out. The 886 all the way down to the 1618. This would have been our PRZ zone, Check it out. Check out that accuracy. I mean, this is a daily chart too, so you had your time. You can take your time with it. You know what I mean? You can wait. Boom. When it rejects off of it, you can just be like, no, I'm gonna wait for a retest. Boom. We got that retest. Notice it went a little bit higher on the first wick on this zone touch, right? PRZ zone touch. Went a little bit higher, and then it closed upside down hammer. That's right there. It's your clue. Wait for a little retracement. So, boom. Okay. We get the drop off. Walk it through, walk it through. Alrighty, I already see one. Alright, so potential, there's actually two forming right here. Let's actually pull out our Fibonacci from this. Okay, so we started off, remember our rejection zone right here from this previous shark. We have that down move. Just following the market, to this low. You see how that spike low and then it retraced? See where that retracement comes in. It's like a 618, possibly 50% or so. So we got a near miss to the 618. The rule for harmonics by Scott Carney is 3%, right? 3% more or less. So I mean, it's close enough to the 618 that we can start. You know, I mean, it doesn't really matter because it's going to be a bearish shark, right? Because it extended below the low and above the high. But anyways, so. Close enough to our 618, so that should be raising our alarms, right? Remember I told you whenever you're looking for harmonics, you see those 618s start hitting 382s. You know what I mean? When you start seeing double tops and then you start seeing those Fibonacci numbers, heads up. All right, heads up. Okay, so we have a down move, a retracement, 618 or so. Let's get our extension. Once again, high, low. Back up in to the origin, and let me put on the 113. Gotta be exact this there. Boom. 113. Pop that on there. Look at that magic. Literally a touch. Beautiful. All right, so it means probably forming a pattern. We get a break up. They start projecting where our D point's gonna be. All right. So far we have this pattern. 113, check it out. 113 touch. You start trending upwards, higher lows, higher lows, higher lows. Looks like we're gonna make a pattern. All right, heads up. All right, so our projection. Let me just leave that there, and I'll fix it right now. ABA, A, up into B, back into A. See a 1618 right there. That's very promising. Looking promising for a shark. Right? 1618, 224 for the shark. Okay, so we have 1618. See the 224 comes in there. No, it's too high. Okay. Perfect. 1618. Alrighty. Perfect. Now, okay. How do we get, now do the AXA. Okay, now get the extension of the X, because you see how I broke above this X point for this harmonic that we're making? See how I broke above the X point? So we know it's an extension pattern, right? So now I'm going to do my AXA. AX. Bring it back down into the origin. 113 comes in beautifully right there. Notice where it comes in. It's lining up with our 1618 from the ABA. Lining up beautifully. And what's even funnier that I haven't seen, that I didn't see before, it's actually lining up perfectly with this zone as well, of this bearish shark. So it looks like we're making another bearish shark. So let me see. So yeah, it's a bearish shark within a bearish shark. Well, like the same zone was used, right? If I extended this zone from this bearish shark, if I extended it, still acting as resistance right there. All right, and then it lines up with another one, which is just beautiful. So that's double confirmation. All right, it's a strong zone. We get those. See how it broke above the zone and then it came back down, still valid. Okay, so if I would go to the weekly chart, go And remember, this zone is just the one that we did off of this big bullish crab. Okay. So we're still just analyzing what's going on here. All right. So notice right here. Okay, this is a beautiful example. I love this. This harmonic is still valid because of this. Look at this weekly close below. All right. On the daily chart, it went up, and then the next day came back down in below the zone. Still valid. Weekly chart closed below, just spiked through the zone, but still closed below, still valid. There's a shorting opportunity. Boom. 2, 3 weeks, 4 weeks, 5 weeks. Boom. All right. So let's see. 1, 2, 3, 4, 5. All right, so really 4 weeks of movement. Really nice movement to the downside. 5 weeks, and then we get the takeoff. All right. The final triple hit, inverted head and shoulders. Boom. Okay. Finally, the big harmonics ready. Takeoff. All right, let's go back to the daily. All right, so, okay, I hope that's making sense for you guys. Okay, let me label that out for you guys so you can actually look on your harmonic sheet. I think I'm going to have it right here above the videos. So bullish bat was our first pattern, right? This is our first pattern, bullish bat. This pattern right here was a bearish shark. And we get a repeat. We get a bearish shark and then another bearish shark. So I'll just copy that. Bearish shark, bearish shark. Alright, and then I'm putting the D points right here. I'm putting where the bearish shark is, the D points, because that's where we're looking for a rejection off of. Alright. Bearish shark, bearish shark. And then we actually, before we get the big takeoff, I'll show you another harmonic pattern just to show you that there was 4 patterns in here. We get a bullish shark. All right, instead of bearish sharks, you see how we got 2 bearish sharks back to back? All right, now, how do we know it's a bullish shark? All right, well, let's start measuring. All right, remember, it's all about measuring. So low to this high. See this high before it retraced deeply right there? So low to high. Right now I'll draw out the arrows for you guys so you guys don't get confused, okay? It's going to be a 50%. Let's see, no, it's not 50%, 382. It's going to be 382 then. 382. Take off the 86. Okay, from this, draw the arrow. From this, move up, hit the zone, reject, pull back to the 382, go up again, make a new high, but then it crashed back down. So what is that telling us? Remember, what type of structure is that forming? Let me fix this arrow so you can see. What type of structure is that forming, guys? All right, I'll leave it there for a second. See it? Harmonic pattern. Once again, so it's just harmonics within harmonics, right? In this big consolidation zone before the big takeoff, right? Before the real move. So let's actually draw it out. Okay, so before I draw it out, let's do our measurements. Okay, so we got that 382. Let's see where this high hit. Okay, so remember, X, A, B, C, D. Okay. So we're going to have to do the inversion. So we're going to have to do the extension like this. Remember how we were doing it, the alternate ABCD pattern? In the first video? Use our Fibonacci extension from this low up to this high. Remember this high? Before I did that double top. Back to the origin. And where does it come in at? 113. Right there, you see it? Let me highlight it right here. Boom. 113. See it? Once again, guys, sharks are the ones that usually have the 113, right? Shark, you're going to see the 113. So this looks to me like it's going to be forming some type of bearish shark. And then when it breaks this 38.2, this middle part of this double top, remember? Double top type structure. When it breaks that middle part, we're going to look for where it's going to hit. Okay, so this is where we're looking for that D point. Where is this D point going to hit? Well, let's use our ABA extension. A, B, up into A. So we're going to be at 224. So see how I passed at 1618. Remember, sharks have 224, 1618 AB extension. So 224 it looks like. All right, so let me actually extend this hair so you can see it. Gotta be exact with this. 24, okay, 224. Let me erase the 1618 on that one. Just cleaning it up. All right, 224. Okay, so now let's figure out if this hit the 886 of this first initial move, right? So Fibonacci, or I'll actually use this Fibonacci, the original one. I'll use the original Fibonacci, and let me just stretch it out. 1 second. Boom. Okay, so add in the 86. Painstaking process, but because I want to keep the charts clean for you guys. Okay, 224, 886 right there. Bullish shark. There's our PRZ zone. Isn't that beautiful, guys? I mean, it's like, that's why I say this is like artwork to me. Okay, so let's actually draw it in now. I'll change the color right now so it can be different. XA, retracement, B, extension, means it's a shark, most likely, in this case. And then boom, came back in, hit the 113, bounced back, right? The extension, that it, right there, that C point, 113. Let's see where the D point's going to come in, most likely 886. And right there to our PRZ zone, boom, take off. So let me change the color to this. Black. Yeah, black looks sick. Okay, so let me label that. That's a bullish shark. Okay, so let me just copy this one. Never mind. Let me just rewrite it. The bullish shark. And I'll make it blue. I'll make it blue. Boom. So let's actually go back over what we just went over. We have a bullish bat, PRZ zone right here, entries. Boom, take off, take profits or hit for sure. And then we have a bearish shark forming. Once again, hits our PRZ zone. Trades would have been activated right here, somewhere here. Take profits, got hit for sure. All right, 618, 382, right? Of C to D, for sure got hit. And then we get another structure forming. Once those lows break and they come back up, we know something's up. Remember, when you make those double bottoms and those lows break and then they come back up, I know something might be up. So then I start measuring what's going on. So then we have another bear shark forming. We have our PRZ zone up here. Price hits it, finally drops, but that drop was really a fake out because the market wants to go up. This was just a nice little breather before the big move. And then we actually form a bullish shark. All right. While it's completing that bearish shark PRZ zone, we also made a bullish shark, right? So that's harmonic within a harmonic. We get a takeoff, hit our 224.86 zone, and then we get the takeoff, our buy limits, our buys. We would have been buying right when it's near the zones, guys. You got to start looking to buy, right? Start looking for other confluences. You start adding in other things, right? Like whatever you like to use, like ADX or whatever RSI, you'll be looking right here in these zones to look to go long, right? And you look for other confirmations, counter trend line breaks, stuff like that. Stuff we'll get into. And then we get the big takeoff, right? Boom. And finally we completed the initial crab pattern. PRZ zone finally bounced off. And we get the big move up. All right. See how our markups are getting crazy? Because it's literally patterns within patterns within patterns, right? So those are harmonics, a little bit more advanced, guys. If you don't know harmonics, once again, go above, watch the other videos. I'm going to be going, basically explaining those videos. I basically just explain each harmonic pattern and what to look for, how the measurements work, and all that. All right, so hope you guys learned something from this video. probably going to go into another pair. Looks like we already exhausted euro pound, right? We already back tested this thing to, the brink. But we can keep going even further back in time and finding patterns, and it's the same thing, guys. It's just repeating over and over again. It's just different measurements, different patterns formed, but it's all basically the same concept, right? You're using the same techniques to get in and out of the market. All right. So for these harmonic patterns, guys, remember you're just looking for the PRZ zone, which is the D point, and then you're going to look to get in. You can also trade the C to D leg. Like this C to D leg, you could have traded it. You can also do that. It takes a little bit more skill to do that because you haven't actually completed the pattern. You're only predicting that it's going to complete. But if the first measurements add up and you're looking good, you can start shooting for the D point, right? The D point completion. As soon as that B point breaks, you know for sure most likely you're going to hit your D point. Okay. And very simple. When those B point breaks, you're going to start looking for the D point to hit. All right. It's very, very simple. Very, very simple. And, harmonics is simple, guys, once you learn it. All right. So on to the next. Peace.